speed of the current momentum, and it may, again, change the direction. For example, the last thing in the market to change is price. And a lot of traders and a lot of analysts say, well, changes in price make changes in attitude. From our standpoint, price doesn't do anything. Price is the effect. The last thing to change is price. What changes before price is momentum. What changes before momentum is volume. And what changes before volume is all of these crazy decisions that we're making out there in bond land. Then the next thing that changes is the speed of the current momentum. It will either accelerate or decelerate. It's like a bowling ball, something heavy. And you take that ball and you roll it down the street. And as the ball is rolling down the street, it continues because it has momentum. If it meets a hill up here, it'll slow down on that hill, and finally it'll come back and go the other way. In market terminology, that's called a change in trend. But actually, from a physics standpoint, when it starts to slow down, it's really accelerating in the opposite direction, isn't it? And the market will tell you that. So when we look at the charts in a moment, the three things we look at, and the only three things we look at, are the price, where the balance line is, the acceleration, and the momentum. And we trade the market on these 5 dimensions. The next thing that produces is a change in the direction of the momentum, and the final thing that it produces is a change in price. And we trade this on a 5-dimensional basis, and we're going to show you exactly some of these dimensions. We won't be able to show you in this time span all 5 of them, but we'll show you some of them. Before we do that, I want to share with you a couple of things that from people who are trading this way. We have now trained almost 600 people in our private tutorial who are now professional, private, and most of them are successful speculators. These are 2 people who came to our seminar about 4 years ago, Charles Parker and Steve Winland in Houston, Texas, and this is a note that we got from them. Bill, I wanted to thank you for your guidance this weekend, as it was very rewarding, and closed as an article from Futures magazine. I'm sure you've heard of that magazine this month. Just to show you how a couple of your students are doing, this was in December, and the headlines were the funds remain in a slump, and these 2 guys went out and established an offshore fund called San Juan Investments. And Futures magazine charts every month a little over 200 funds, and this was number 1. This was in October. Then in the following, this was in December, I'm sorry. The following October of the next year, it's interesting that they're still number 1 and number 5. 2 of the top 5 were trading exactly what we're talking about. And then 1994, notice down here the top performers for 1994 from Futures magazine, and you could believe anything you read in Futures magazine, was San Juan Investments. The thing that takes chaos from chaos to cosmos, which is unorganized or seemingly unorganized, to organized, is a thing called fractals. Now, fractals are nothing new, and don't be frightened by the word. When Columbus invaded America, the mathematicians back in those days were talking about fractals. And in the 1400s, in the 15th century, they were talking about, these are the theoretical mathematicians, they were saying, well, a dot has no dimensions. They were talking about dimensions. And they said a line has 1 dimension, a plane has 2 dimensions, a solid has 3 dimensions. And then they asked themselves the question, suppose you had a very curvy line, and if you have a curvy line, it's still 1 dimension. And you had this line, and it was so curvy that you had a plane, a rectangle here, and this line goes through here, and it's extremely curvy, and it goes back and forth and back and forth and back and forth, and then comes out the other side, and it shades 1/2 of that plane. What is the dimension of that line? Well, for 500 years they pondered that. And then a very brilliant scientist by the name of Benoît Mandelbrot came up with the idea that this is a fractional dimension. If it covers half of this plane, its dimension is 1.5. Now, what that's saying is that in a chart form, an irregular scattered pattern will have a higher dimensionality than one that's very smooth. A straight line through this would have 1 dimension. If it were a plane, it would have 2. Mandelbrot went further, and he analyzed the fractal dimension of the Mississippi River. And here we go down the Mississippi River, and he found that the Mississippi River had a fractal dimension of 1.2610, which meant that it was curvy enough or staticky enough or back and forth enough that it covered 1/4 of that plane. Then the IBM management, and he's a professor emeritus of advanced mathematics at Yale and is also still working for IBM in Yorktown Heights, New York. They came to him and said, well, you know, it's nice that you're analyzing this, but it'd be more helpful for us, since we're supposedly a for-profit corporation, if you would analyze something that we might make a little money out of later. And he took a four-prong approach. He said, okay, we'll look at economics, we'll look at physiology, which is medicine, we'll look at sociology, and we'll look at psychology. And from that, and by the way, directly because of that, we have two things. We have artificial hearts that work, and we have the World Wide Web. The World Wide Web would not work without chaos, and I'll show you why in just a moment. But what Mandelbrot did is he said, okay, we'll go and we'll study economics. And in Yorktown Heights, the largest database they had were corn and cotton prices. So he analyzed corn and cotton prices, and guess what he found? To 3 decimal places, they had the same fractal number exactly as the Mississippi River. And then they later analyzed the Ohio River, and then they analyzed the Tennessee River because it was dammed up and interfered with by man, and all of them had, to 3 decimal places, the exact same fractal number. The day that I read that, I did not sleep a wink all night that night, because it was like the curtains were opening. What it said was the markets are a natural function. They're not a man-made function, they're a natural function. So if you really want to see how the markets work, take a pitcher of water out here and pour it on the ground and watch this strange attractor gravity come in and pull it around the rocks and around the high places and the low places. So this was the Mississippi River, and this was the corn chart. Same exact thing. If that be true, then the science of chaos offers us a great deal in analyzing the markets and understanding the markets, and it may be a key to why technical analysis doesn't work any better than it does. It may be a better map in which to analyze the market, and we think it is, and we think that we can very easily prove that. So let's talk about a fractal. A fractal is a change in behavior. So when the market goes up and then comes down, that's a fractal, a trend change. A fractal, one fractal that's very easy to locate is a fractal of when you will get out of the market. And you will always get out of the market at that exact point where losing $1 more is more painful than saying I shouldn't be in this trade. And when you get to that point, you'll get out, and that's a fractal. A fractal was when you decided to come into this room rather than to go into one of the rooms down the hall. A fractal will be when you decide whether you're going to use this material in your own trading or not. When you decide Monday or Tuesday to buy a bond or sell a bond, when you make that decision to call the broker, that's a fractal. How do we look at a fractal in the market? On page, in your notes on page 9, there are some key fractal formations. And a fractal, when we were first looking at this, we called this a 5-fingered boogie. And we called it that for lack of imagination of anything better to call it. When I was in college, I worked most of my way through college playing in a Dixieland band, and we had a number that featured the piano, which was called the 5-fingered boogie. So it's like your 5 fingers. The definition of a fractal is that there must be, an up fractal, there must be a bar that is higher than the 2 preceding bars and higher than the 2 following bars. Now, the 2 preceding bars and following bars don't have to be like a tent. They don't have to be this way. They can be anything, they just can't be as higher. So here, on this first illustration, we have a pristine fractal. On the second one, notice that we have 2 that are same height on the middle finger. That's okay. That is still a fractal up. Over here we have 3. It's still a fractal up. It's a fractal, it's a fractal. Down here we have the exact same thing, a fractal, a fractal, a fractal, and a fractal. It takes only a minimum of 5 bars. It can be more than 5 bars, but you have to have 1 bar that's higher, or for a sell, 1 bar that's lower. And let's look at an example of this, and let's look at an example in a real chart. And by the way, these are actual trading examples. These are not hypothetical. Let's look at trading the Japanese yen on a daily basis starting in January of last year. And this is trading on a daily basis and trading one contract for every signal. And we'll follow this through January, February, March, and until April the 19th, which is where we got out of this trade. This is January, and that's, yeah. And notice that the first fractal up is demonstrated or is noted by this caret here. And notice that it has a high, it has two previous lower highs, followed by two lower highs. So our stop, our buy stop, is one tick above that fractal. So we bought that fractal at and we're filled on it at 102.31. Any questions about that? We have the five-fingered boogie or the fractal, and the market goes beyond that. It's a breakout. It's obviously a breakout trade. Yes, a question.
I assume you bought it on the 5th.
The question was which bar we bought it on. We buy it on the first price that exceeds the top of that fractal. We take one tick above that, and when it hits that, we're gone. Now, since you're buying a breakout, you obviously have the world's worst trade location, don't you? You also have the maximum potential loss. So you need to be satisfied a little bit. Now, remember that we're looking at the market from 5 different dimensions. For example, let me give you an example. Let's say that we have an aquarium here, and we have a fish in that aquarium, and you have a television camera here, and you have a television camera from over here. You're going to see 2 different fishes, aren't you? And if we look at the chart just from the price standpoint, we're only going to have one dimension of that. One of the characteristics of the market is simply this, that most of the time, about 70% of the time, the market's going to do nothing, and only about 15 to 30% of the time will the market trend. And this trending is where we make most of our money. And you've heard, I'm sure, from a lot of traders, they'll say, well, making money in the market is easy. The hard part's keeping it. And what they're saying is that anybody can make money in that trend, but when the market's not going anyplace, that's when the floor brokers, the locals on the floor, will take your money away from you. And what the fractal guarantees is that you will not be left out of any of these trends. My grandfather used to tell me that even a blind chicken will find an ear of corn every now and then. And we call these blind chicken trades. I mean, there's absolutely nothing skillful in making money in a trend like that. You just got to be dumb enough not to get out. And it's very easy. This is the easiest trade to make. It's not the most profitable, because on the 5 dimensions, this is the 4th dimension to get in. So in this fractal and in this illustration that we're using here, we would have been in before that fractal, but right now let's talk only about the fractal. So that was our first entry. Now we had a fractal up here at 103.81, up at that, and that was on January the 16th. And then on January the 23rd, we had a fractal down form, and notice that it was never hit in January. And then toward the end of the month, we had another fractal. So we ended up the month on a daily basis, and we had 20 bars. We had 3 fractals up and 1 fractal down. Only one of them was hit. So we're ending up the month, and ending up the month of January. At the end of the month, we were long from January the 12th, fill at 102. That was our fill, 102.31. The yen was at 101.90 at the end of the month. We're carrying into February a 41 point or a $513 open equity loss. So we've traded the yen on a 1 contract basis for the entire month of January. We're behind $513. Not too good yet. Then we go into February, and February we had another down fractal, we had an up fractal, a down fractal, and another up fractal. So in February we had 4 fractals, 2 downs and 2 ups. Neither one of the downs were hit, and this is on your notes on page 12. The center of the fractal buy forms with a high of 102, and then on February the 13th we were filled on the opening on our fractal buy from February the 8th. And then on February the 16th, we were filled on our January 16th and January 30th fractal buy, and had slippage on both parts because we had a gap opening. We're only trading the Chicago markets. We're not trading the overnight markets. So we had this gap up. We were filled on both of those fractals. So at the end of February, where we were standing is that the yen closed out the month at 104.57. We're long 4 positions, 102.31, 104.11, 104.11. That was on the where we got filled on 2 with slippage, and 102.76. We also have a buy stop order for another position at 104.91, and we're carrying into March an open equity profit of 539 points, or $6,738. Much better than the end of January. $500 open equity loss. Now we have a little better than a $6,700 open equity profit, and we are now in 4 contracts, I'm sorry. Then we come into March, and March was extremely good to us. We only had 2 fractals in March. Now, can anyone tell me why this point right here is not a fractal? Why is that not a fractal down? Yes. Right. It needs a higher low here in front of it. It only has 1. And remember, it has to have 2 on both sides. So that is not a fractal down. The same thing is true with that one. That's not a fractal down. And this is not a fractal up here because it doesn't have 1. So it takes a minimum of 5 bars. At the end of this month, though, we had a buy order from March the 23rd was filled at 14.81. The market closed out the month at 116.97, giving us the following open equity profits on 5 long positions. Now, you're in 5 positions on a 1 contract basis. We trade a multiple contract basis, but we're looking at this only on a 1 contract basis. And at the end of the month, we had 5,675 points, or a little better than $70,000. And that's for 3 months. And that's a little bit better than working for a living. And then on April, we came in. Listen, I have not always been a winning trader. Let me be real honest with you. And back in about 80 and 82, I almost bit the dust. And I was literally having nightmares. And my nightmares were I was having to go out and apply for a real job. And that is a nightmare. At the end, we actually bailed out of this trade on April the 19th, a day after this, and we actually had a little bit more profit than this, but we made this up on April the 18th, and we had 6 positions long. And our 6 positions had a total of 9,000 points, or $121,000. That's 3.5 months. There are traders who don't make that much in a year. And this is obviously a good example. I'm going to show you some good examples, and I'm going to show you some bad examples. This works on every commodity, and it works on every time frame.
What caused you to get out at that particular time?
Because we had a sell. It was a reversal. Yeah, we don't. One of the things, and by the way, let me dispose of another kind of thing that you'll hear over and over again. What you'll hear over and over and over again is that there is no Holy Grail. And let me stand here and testify to you that there absolutely is a Holy Grail. And I can give you that Holy Grail in 5 simple words. And if you remember these words, and if you abide by these words, you will not be a losing trader. The Holy Grail is simply to want what the market wants. It's as simple as that. Want what the market wants.